Welcome to the Direct Lending Connection podcast, your premier source for unparalleled financial insights tailored for elite business owners, international entrepreneurs, and real estate investors. Whether you're running a thriving enterprise, scaling up your real estate portfolio, or looking for the next big opportunity, this podcast is your go-to resource for cutting-edge knowledge and strategic advice that keeps you ahead of the competition. Now, for today's episode, join us as we explore how to unlock hidden funding, creative financing strategies for startups, mid-size, and large businesses.
Hey everyone, ready to deep dive into something that I think stumps a lot of us, business financing.
Yeah, financing can be tough, but we're not just talking basic loans today.
We're going way beyond the basics, right? Like, forget everything you think you know. This is about creative financing.
Exactly. We've got research here on all kinds of businesses, startups, public companies, even subscription models.
So we're covering the whole spectrum.
Pretty much. Different businesses need different solutions at different stages.
Okay, this is going to be interesting. So where do we even start with creative financing? What are some examples?
Well, one that might surprise you is shell companies.
Shell companies. Wait, hold on. What are those again? And how do they help with financing?
So basically, a shell company is like a business that's already set up, but it doesn't really do anything.
It's just kind of there.
Exactly. But the thing is, it often already has business credit established.
So it's like stepping into someone else's financial shoes.
Exactly. So if you're a startup, acquiring a shell company can give you instant credibility. Doors open that would be closed otherwise.
But I'm guessing there's some big buts here, right?
Oh, definitely. Due diligence is absolutely critical. You got to vet that shell company's history, make sure everything's legal and above board.
It sounds kind of risky.
There's always risk. But if you do your homework, shell companies can be a legitimate way to get a leg up.
Okay, so shell companies, that's one. What else we got?
This one might surprise you even more. Insurance.
Insurance. Like business liability insurance. How does that help you get funding?
Think of it from a lender's perspective. They want to protect their investment, right?
Yeah, for sure.
Certain types of insurance can actually make your business less risky in their eyes.
Okay, I'm not seeing the connection yet.
Say your startup depends on fulfilling contracts.
Okay.
Contract performance insurance covers you if something goes wrong so you can't deliver.
Ah, I see. So it minimizes the lender's risk.
Exactly. Makes them way more comfortable handing over that money.
Huh. Insurance as a financing tool.
Yeah.
That's a new one. Okay, I'm liking where this is going. Yeah. But let's dig into something I know our listeners always ask about, the whole subscription versus non-recurring revenue thing.
Ah, yeah, that's a big one.
I mean, subscription businesses like SaaS companies, they've got that predictable income. It seems like it'd be easier for them to get financing, right?
Oh, definitely. Predictable revenue is like gold to lenders. There are even platforms now specifically for subscription businesses.
What are those platforms?
They let you basically sell a piece of your future revenue at a discount. Get cash now in exchange for a cut of what you'll make later.
So it's an alternative to giving up equity or taking on high interest debt.
Exactly. Pretty smart, right?
Really smart. But what about those of us who don't have that nice, steady subscription money coming in?
Non-recurring revenue businesses have it tougher, for sure. Lenders often want personal guarantees.
Meaning you're on the hook personally if the business can't pay.
Yeah. Or they might want collateral, something to back up the loan.
So those tempting credit card offers, probably not the best route.
Definitely not. High interest can kill a new business before it even gets going. You got to be smart about those early financing decisions.
Noted. So we've covered startups, but I know a lot of our listeners have businesses that are a bit more established. What about when you hit that mid-market stage and you're looking to really scale up?
Things change there. Your needs are different. And sometimes traditional lenders just don't get it.
What do you mean?
They get so hung up on tangible assets and past performance, they miss the bigger picture.
Which is?
The value of intangible assets.
Intangible assets. Okay, break that down for me.
It's things like your brand, customer loyalty, intellectual property, the expertise of your team.
Stuff that's not easily measured on a spreadsheet.
Right. But it's often where the real value of a mid-market company lies.
And thankfully, there are lenders who understand that, right?
Oh, yeah, absolutely. Some even let you borrow against your brand value. If you can prove it gives you a competitive edge.
So we're talking about a whole different way of looking at what a business is worth. And speaking of different perspectives, what about public companies? Their financing seems like a whole other world.
It is. Much more structured, more regulated. Credit rating agencies play a huge role.
So your reputation is everything.
Pretty much. Big, established public companies usually have no problem getting good financing terms.
But what about the smaller ones? The ones on those? What are they called? Secondary exchanges.
Exactly. They might have less liquidity, meaning it's harder to buy and sell their stock, makes them less attractive to investors.
So even in the public company world, there's a need for creative solutions.
Absolutely. Things like insured growth plans or alternative capital structures. Sometimes it's better than issuing more stock and diluting ownership.
Interesting. It seems like no matter where you are in the business life cycle, there's always room for creative thinking when it comes to financing.
Couldn't agree more.
Okay, well, we've covered a lot of ground already. Let's talk more about this whole intellectual property thing. Patents, trademarks, all that. We all know it's valuable. But how do you actually turn that into funding?
The key is proving its worth. You need meticulous documentation. Show how your IP directly leads to revenue or gives you a competitive advantage.
So it's not enough to just have a cool invention or a catchy brand name.
Yeah.
Got to show the money, right?
Exactly. Luckily, there's a growing number of lenders who specialize in IP-backed financing.
Oh, wow, really?
Yeah, they actually understand how to value intellectual property. They're more willing to use it as collateral.
That's great news for companies that are heavy on ideas but light on physical assets. So much to consider here. Any advice for those just starting to dip their toes into this creative financing pool?
Be proactive. Don't wait until you're desperate for cash to start thinking about funding.
So, like, build relationships with lenders early on?
Exactly. And think long-term. Create a framework for how you'll secure capital as your business grows.
That's smart. Because traditional lenders aren't always that flexible, are they?
Not always, but there are innovative firms out there who can help you structure funding to match your growth trajectory, anticipate your needs down the line.
Like a true financial partner walking alongside you. Okay, I can't let us move on without talking about fintech. I mean, it's revolutionizing everything, isn't it?
It really is. Fintech is making financing way more personalized, more accessible.
How so?
Think online platforms connecting you with the perfect lender for your situation.
And these lenders understand different revenue models.
Oh yeah, they get the nuances that traditional banks might miss.
This is great news for anyone who's ever felt like they don't fit the mold. And it's not just platforms, right? You mentioned something about asset-specific lenders.
Oh yeah, that's another huge trend. We're seeing lenders who specialize in things like brands, patents, even customer contracts.
Wow, so specialized.
It's amazing. It's all about finding the perfect match between a business and its funding source.
So it's really not a one-size-fits-all world anymore.
Not at all. And that's where things can get tricky.
Because with so many options, it can be hard to know where to start.
Exactly. That's why professional guidance is crucial.
So it's not just about finding the money, it's about finding the right money.
Absolutely. You need experts who can help you identify your most valuable assets. Someone who can analyze your brand, assess your intellectual property, basically put a dollar value on your unique strengths.
And then articulate that value to potential lenders.
Exactly. These advisors can even help during mergers and acquisitions, making sure you get the best possible deal.
It's like having a financial translator and guardian angel all rolled into one. This is incredible stuff.
It really is. And it's all about empowering entrepreneurs, giving them the tools they need to make smart decisions.
This whole deep dive is already blowing my mind. Who knew there were so many ways to think about financing?
It's a whole new world out there.
And it sounds like we're just getting started.
So many options, right? From shell companies to using insurance to, well, boost your financing chances. What's sticking out to you so far?
I think what's really hitting me is how limited our thinking around financing usually is. You know, it's always loans or bootstrap till you drop.
It's like we're stuck in a rut, but what we're seeing here, this is a whole different ballgame. So many options, tailored for different needs.
And at different stages of the business, too.
Exactly. And it's not just for startups struggling to get off the ground. Even successful companies, they can benefit from thinking outside the box.
Right. Like, why not find the most efficient way to fuel your growth no matter where you are?
Exactly. And that's where having some expert guidance can be so helpful. Finding those hidden strengths, whether it's a strong brand or a loyal customer base, it can make all the difference in getting the right funding.
It's like having a financial strategist on your team, someone who sees the bigger picture. But beyond just strategy, what I think is really cool is how these alternative models are, like, democratizing financing.
Yeah. It's opening up doors for businesses that traditional lenders might have overlooked.
Fintech especially. I mean, think about platforms designed for women entrepreneurs or minority-owned businesses. Those are game changers.
Fintech is breaking down those old barriers, making capital more accessible to everyone.
Like the financial world is finally catching up to how diverse and dynamic the business world actually is. And I bet as technology keeps evolving, these options are just going to get even more innovative.
Oh, for sure. We're just scratching the surface here.
It's exciting, right? But, okay, let's get real for a sec. There have got to be some downsides, some challenges we should be aware of. What are some of the things people need to watch out for?
Right. I mean, some alternative financing can come with higher interest rates, or maybe the terms are a bit more restrictive than a traditional loan.
So it's not just about grabbing the first deal that comes along.
Definitely not. Due diligence is key, always. You got to vet those lenders, understand their track record, and don't be afraid to ask the tough questions.
Yeah, maybe even get legal or financial advice before signing anything.
Absolutely. And even though speed and convenience are often seen as big pluses with alternative financing, it's still important to take your time. Don't rush the process. Make sure you really understand the terms before you jump in.
So it's about finding that balance, being agile, but also being cautious.
Exactly. You want to seize opportunities, but not at the cost of your long-term financial health.
So much to consider. I think what I'm taking away from this deep dive is that we need to shift our whole mindset around financing. We've been trained to think of it as this necessary evil, this obstacle to overcome.
Right. Like something we have to do.
But it can actually be a huge advantage, like a catalyst for growth, even innovation.
It's all about how you approach it. And the cool thing is these new creative models are proving that. We're moving beyond just numbers on a balance sheet.
We're starting to look at the bigger picture, the potential of a business, its ability to disrupt and make a real impact.
It's a whole new way of thinking. We're tapping into the passion, the purpose behind these businesses.
It's like we're developing a whole new language for finance, one that truly captures the spirit of entrepreneurship.
And as more people start speaking this language, it's going to change the game. More entrepreneurs will be able to chase their dreams. More innovative ideas will see the light of day.
It's pretty incredible to be a part of this shift. It's like we're moving towards a business world that's more equitable, more accessible.
Yeah.
And that's powerful.
It really is. So, to everyone out there listening, don't limit yourself. Your potential is huge. Your dreams matter. And the resources, they're out there. Just got to know where to look.
This deep dive has been seriously eye-opening. I mean, who knew there were so many ways to think about financing a business?
The possibilities are endless, right?
It feels like the old rules are being thrown out the window. And entrepreneurs, they're the ones in the driver's seat now.
It's an exciting time to be in business, that's for sure. If you're willing to think creatively, to embrace those unconventional solutions, the sky's the limit.
Well said. Well, I think that about wraps up our deep dive into this fascinating world of creative business financing. So much to think about. As we wrap up, I want to leave everyone with one final thought. What if, instead of focusing on what your business is right now, you could get funding based on its potential, like its unique strengths, its future impact?
That's a huge shift, right? Imagine if lenders saw the value in a great brand story. Or a truly groundbreaking innovation, not just the numbers on a spreadsheet.
Because a business is more than just its balance sheet. It's about the passion behind it, the drive to create something new, something better.
And these creative financing models we've been talking about, they're making that possible. We're starting to look beyond just the quantitative stuff to the things that are harder to measure but just as important.
The heart of entrepreneurship.
Exactly. And as this new way of thinking takes hold, it's going to be huge. More entrepreneurs will be able to achieve their goals. More great ideas will come to life.
It's an exciting time to be a part of it all. To see these changes happening, the business world is becoming more inclusive, more accessible.
Couldn't agree more. So to all the entrepreneurs listening, don't ever underestimate yourselves. Your potential is limitless. And the resources, the support you need, it's out there.
This deep dive has honestly changed my whole perspective on financing. I'm so glad we had this conversation.
Me too. It's been eye-opening.
So to everyone out there, keep dreaming big, keep innovating. Don't be afraid to challenge the status quo.
And never, ever stop believing in your ideas.
Because the future of business is being shaped by people like you. People who dare to imagine something different.
Maybe the next time we do a deep dive, we'll be featuring your story. The story of how you took that spark of an idea and turned it into something amazing.
Until then, keep pushing those boundaries. Keep inspiring us all. Thanks for joining us on this incredible journey into the world of creative business financing.
Thank you for tuning in to the Direct Lending Connection podcast, where knowledge meets opportunity and empowers your business journey. If you found value in today's episode, be sure to subscribe, rate, and leave a review on your preferred podcast platform. Your feedback fuels our commitment to bringing you more high-impact insights and actionable advice. For exclusive content and upcoming episodes, and to connect with our network of industry experts, visit directlendingconnection.com. Remember to subscribe here on YouTube and follow us on Facebook for the latest updates and bonus material. Until next time, stay proactive, stay informed, and keep building your path to financial excellence. The Direct Lending Connection Podcast, your trusted partner in navigating the complex world of business finance. We'll see you in the next episode.